Ladies and gentlemen, good afternoon and welcome to Ajmera Realty and Infra India Limited Q4 and FY22 earnings conference call. We have with us today Mr. Dhaval Ajmera, the Director of the company, and Mr. Nitin Bhavesi, the Chief Financial Officer. Please note that all the participant lines will be in the listen-only mode and one can ask questions only after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Bhavesi, the Chief Financial Officer, Ajmera Realty and Infra India Limited. Thank you and over to you, sir.
Thank you, madam. Good afternoon, everyone. We hope all of you and your loved ones are safe and in good health. I thank you for joining us today on the conference call of Ajmera Realty and Infra India Limited to discuss company's results for the Q4 FY22. We would like to begin the call with the brief opening remarks from the management followed by Q&A session. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature, reflecting our future outlook, and they involve certain risks and uncertainties the company may face. The investor presentation based on the financial results adopted by the board has been uploaded on the stock exchange website and can also be downloaded from the website of the company. I would like to now invite our director, Mr. Dhaval Ajmera, to begin the proceedings of the call. Over to Mr. Dhaval bhai.
Thank you, Mr. Bhavesi. Good afternoon, everyone. I hope everyone is safe and sound. As we all know that we are here for the Q4 FY22 earnings call. Firstly, a big thank you and warm welcome for all of you, and thank you for joining this call. We as Indians have been quite an eventful year this last FY22, I can say. As resilient as we were, we got through this pandemic, and while we were just coping up, obviously we came through and we were hit by the geopolitical situation which is happening all around because of the Russian invasion of Ukraine. Primarily for us as real estate, this has given us maybe a probably, and we hope it's a temporary effect in terms of the supply chain disruptions, the crude oil prices which have gone up, and obviously there has been a direct and indirect impact of the economics across the world. While the COVID was responsible, I would say, for people to realize the importance of home, and definitely its preference towards real estate to investors, buyers, and everybody in India has definitely moved ahead. And we can see that over the amount of sales happening all across in India, be it affordable housing, be it a villa plot, be it just a plot or a bigger house. Everywhere overall there has been a good growth. Home ownership has gained top priority status amongst the home buyers, with housing demand shifting from whoever has probably a bedroom, they want to expand. So even if I have a 1 bedroom, I would want to go to 2. If I have a 2, I would like to go to 3, etc., etc. So we have seen that kind of demand growing, and this is becoming a long-term investment asset. With obviously the introduction of hybrid culture, work from home, and now slowly work back to offices also has been the culture which is coming in. We are seeing a good demand coming up even in the commercial space. And overall, with the kind of the economic impact and economic growth in India which is happening, I think overall demand for offices also is looking positive in the coming years. The sector has also seen and benefited from the decade-low interest rate, which obviously over the last few months or the last few weeks we have seen it increasing, and we just hope this momentum continues and the government. I know it's a very difficult ask, but if this interest rate continues, obviously it brings a big momentum within the minds of the buyers, which actually impacts the overall significant sales in real estate, which indirectly contributes to 280 other industries. So overall, I think real estate plays a big role, and we just hope that this impact is not as large and probably doing a further dent into the demand. Overall, as I said, we see a great demand even from luxury to affordable to mid-segment. Every other segment of houses, we are seeing a good demand coming, and even in the office sector. I would also like to mention a few highlights about the union budget, which has also been optimistic for real estate, although indirectly and not directly. But it gave an emphasis and overall benefit about the urban development, allocating about 48,000 crores for the affordable housing, and also ensuring that we have a control on the steel prices by reducing the anti-dumping duty. So we feel that, government is pro-real estate, and we just hope more measures being taken to make this demand better. Now, coming to our projects, I'm very proud to say that a lot of our projects, which were as of last year or as of during the year, which were under construction, has moved towards the OC stage. Primarily, one of our projects being Ajmera Greenfinity at Wadala in Mumbai has been showcased ahead of scheduled execution of 22-story superstructure, which got completed in a span of just 14 months. Our commercial project, Sikova in Ghatkopar, has also witnessed a great sale of about more than 50% of boutique offices sales. Out of about 400 odd offices, we have seen 200 odd already being sold, and that too during this pandemic period. From all the existing projects, that estimated balance revenue is expected to about 800 odd crores. As a move towards our 5x growth, which we have announced, and where we all, as a team, everyone from management to our entire team is working rigorously day and night to envision and make our vision come true, a dream come true. We plan to launch 5 projects in Mumbai and 1 in Bangalore during the coming years, FY23 and 24. This will give us a total potential revenue of 4,000 plus crores with an estimated saleable area of 2.8 million square feet. Thus, the total revenue from the existing plus the new launches will be in the tune of about 4,800 crores in the next 3 to 5 years. We are also aggressively looking at inorganic growth within our company by doing some JV JDAs, where we are in a very advanced stages, and we hope to have some few announcements and tie-ups coming in the coming quarters. Also, in this direction of to achieve 5x, we are delighted to inform you that we have progressed well in one of our flagship projects known as Ajmera Manhattan, which is part of our 100-acre master layout development in Ajmera Island in Wadala. Over the last decade, in this project at Ajmera Island, we have done sales worth 2,000 crores with an estimated sales area of 1.3 million square feet. We now have delivered Ajmera Aeon, Xeon, and Trion, and now Manhattan is progressing faster, and already construction activities have started, and very recently we have also launched this project. This project is complete in terms of all aspects, be it permissions, be it approvals, be it environment clearances, and obviously with all the construction which is going on in full swing. Other projects also where we are just about to start is in Juhu in Mumbai, where we have acquired the high-end residential redevelopment project, which is a top line of about 150 crores. We are happy to say that all the tenants of that project have been vacated, and the building is already under demolition stage, where we hope to start construction of the same in the next 2 months. Also, our commercial project in Bangalore, known as Ajmera Nucleus, is almost ready, which will give us great generation of revenues over the coming quarters, because we moved our strategic from rental base to sale model, unlocking its value and bringing up our revenues by 100 plus crores from that project, which we hope to realize in the coming quarters too. While we acknowledge our business activities, but we have not forgotten our environmental activities and our responsibility towards the same in society. As Ajmera, we have been involved in various ESG activities, such as our contribution to water management program, benefiting the entire population of about 2 villages within Maharashtra, improving nutritional status of malnourished children, providing education and medical assistance, to name a few. Property price is an inevitable because of the rising inflationary trends which we see in the raw materials like steel, cement, etc. And we are seeing that there has been a lot of pressure from the input costs. This will affect and have an impact of incremental prices which we will see in the coming quarters for our projects because the cost is increasing and which is inevitable. However, we don't see this momentum because of this price rise being low because overall inherently there is a good demand for real estate, and I see this probably would be a temporary bit, but overall the demand is quite positive and we are looking at a great run in this coming year. I would like to thank all of our shareholders and everyone who's here who have supported us and been with us all this while we are in our journey for the 5x growth in the coming years, and we hope to see great results coming forward. I would now like to hand over the conference to our CFO, Mr. Nitin Bhavasi, to share with you the performance highlights and the financial highlights of this quarter and the year. Over to you, Nitin Bhai.
Thank you, Mr. Dhaval. I would like to now take you through the operational and financial performance for the financial year and as well the fourth quarter ending March 22. I will begin with the operational performance first. We sold 344 units, sale value of around 431 crores and at measuring 345,000 square feet for the year ended 31st March 22. We collected 394 crores during this particular year, and the average realization per square feet remained 12,400 plus per square feet basis. In terms of our performance for the quarter ending March quarter, which is the quarter 4 F2, we sold 128 units with a sale value of 122 crores, which is an increase of 12% on a QOQ basis. The volume of area sold is 90,000 square feet, which is an improvement of 4% over the previous quarter. Our collections remained stable during this particular quarter as well, 93 crores, which is also an increase of 11% on QOQ basis. And the average realization increased 13,400 per square feet, improving about 8% on a sequential quarter, which is 12,400 on a QOQ basis. So now coming to financial performance for the full year FY22, our revenue stood at 489 crore, which is 39% jump on a YOY basis. Our EBITDA stood at 123 crores and EBITDA margin remained at 25%. PBT stood at 62 crore, an improvement of 51 crore, while PAT stood at 45 crore, which is also an improvement of 50% on a YOY basis. The PBT margin remained at 13% and PAT margin at about 9%. Coming to the quarter numbers for quarter 4 FY22, the revenue stood at 184 crore, which is a massive of 130% higher on a YOY basis and 162% higher on a QOQ basis. EBITDA also has a very significant increase, 43 crores, an increase of 64% on a YOY and 103% on a QOQ basis. Our PBT stood at 20 crore, which is an improvement of 21% on YOY and 51% on QOQ basis. And PAT, which is the last indicator, which is at 14 crores, which is improvement of 12% on YOY basis and 44% on a QOQ. Along with the traction in the financial metrics, as I have mentioned, we also have a good traction in the average sale price realization, which is also more than about 1,000 rupees per square feet in both YOY and QOQ numbers basis. The EBITDA margin stood at 23% and PBT margin at 11% and PAT margin at about 8% kind of. In the our endeavor to bring further more efficiency on the secured debt side also, in the quarter 4 we have reduced our debt by about 56 crore due to good momentum in our sales and collection on the sales front. As mentioned in the last quarter, our project level debt has increased due to front loaded cost of approval cost, which we paid by December 31st as a deadline, which was the available concession of the 50% basis. The weighted average cost of debt also has come down, which is 11.2% as compared to 12% as on the last year FY21 basis. And this is despite the rate increase by the lenders during last period in the financial year FY22. So our net debt equity ratio stood at 1.14:1 in FY22, which was compared to last year it was 1.08. We have strong visibility of about 800 crore plus from our existing portfolio, which is from the ongoing projects. From our advanced stage project, we do have this balance sold inventory revenue available, which is 5 crore, and balance of unsold inventory revenue, which is at 161 crore. From our mid-stage project, the balance of sold and unsold inventory revenue is 158 crore and 495 crore respectively. Our ahead of schedule executed Greenfinity project, which is, and also the commercial project, which is a Sikova project, as Dhavalbhai mentioned in the opening note. So both these projects have progressed well during this execution time, and happy to share that Sikova project became the revenue eligible project during Q4 FY22. We have further enhanced our advanced stage project revenue visibility by moving commercial project development, which is at Nucleus project at Bangalore, which was initially we thought of annuity-based asset to retain into the balance sheet. However, now given the kind of indications which is post-COVID, whatever the hiring trends and the office space reopening kind of a thing, we feel that the outright sale indications and the serious inquiry will fetch us a good cash flow generation out of this particular sale. We have the balance receivables from existing portfolio, which is 262 crore, and the estimated unsold inventory value is 655 crore. And balance cost to complete this ongoing project is around 460 crore, and outstanding debt of 107 crore on this portfolio. This leaves us a estimated surplus cash flow of about 340 crore plus in this out of the existing portfolio. We will continue to work on further improving our performance in the coming quarters and in the conjunction with our growth plans. On this note, I would like to conclude my remarks and would like to open the session for the Q&A, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1 at this time. We take the first question from the line of Mir Desai from Desai Investment. Please go ahead.
Thank you for the opportunity. Sir, I had a couple of questions. Starting with, so if I see there is no change in completion percentage in Bangalore projects, Florenza and Lugano. Sir, can you throw some light on this?
Sure. So Florenza and Lugano is the project where we have the AB wing which is under construction, and C and D wing which is also just started kind of a thing, and we are contemplating to refinance the entire project through a B and C and D wing, all 4 put together. And we have just moved this project from the revenue model with a landlord arrangement to a area sale model. So that's how that particular project is going to see the entire A, B, C and D wing as a project and start the revenue recognition based on the entire enhanced footprint of the project kind of a thing. That's how the numbers have remained at what it is.
Okay. So this completion percentage should increase from Q1 is what the understanding is correct?
The reconfiguration of the A, B and C and D as a project to go under the POCM method will definitely change the entire dynamics of the project completion percentage, and then accordingly, based on the revised enhanced project level, it would be undergoing the change, and accordingly, given the A, B, and C and D being all four put together, will be the POCM as per the revenue process.
Sure. So my next question is, how do you see the increasing competition in Mumbai, sir? Now that we are seeing players like Prestige Group entering in Mumbai, so what is your take on this, sir?
So, see, basically, any competition is healthy, and our belief is that real estate now is going to be a lot into projects and developers who have already shown, development and projects delivered. So while we at Ajmera delivered 45,000 homes and being established in this area or in this field of construction over the last 53 years, we are fairly confident in terms of the demand which is coming. So even that can be inevitably being seen in projects where we are today. So just to give you an example, like area like Badala, although there is a massive amount of competition in and around, but we see a good demand coming. And in the time with the recent Manhattan launch, there has been a good traction of sales and inquiries coming in. So this in fact shows the impact of the brand and the which has been in this project or in this field since a long time and showing results.
Sure. Understood. For further any questions, I'll join the queue, sir. Thank you.
Sure.
Thank you. We take the next question from the line of Ankita Mehta from RC Capital. Please go ahead.
Hi. Thank you so much for giving this opportunity. I had a couple of questions. I just wanted to know about the margins. The margins have gone on a lower end this time. So just assuming that inflationary pressure was there. So I just wanted to know what are the other reasons that could be there post for this, and also would this be the further part which would play for lower margins, or how are we bouncing back from there? And is there any strategy that the management is taking for this?
Sure. So firstly, I will give basis the numbers. We have sequentially from between quarter 3 versus quarter 2 and as well quarter 4 versus quarter 3. In FY22, we have the per square feet realization which has gone up. This is about 5% and as well 8% in the last quarter kind of a thing. So that has remained kind of a thing, given us some kind of a support. However, the inflationary pressure, because we are on the fast track execution of all our projects, be it at advanced stage, to bring it back to the almost at a OC stage kind of a thing, or the case study like Greenfinity, which is a very super fast track, like 22-story completion in 14 months. So significant part of the cost and the execution time remained in FY22. So is the case with the Sikova, because that particular project also seen fast track execution and almost now 90% of the superstructure completed by around FY22 March kind of a thing. So good amount of cost has gone into the spending side, and as we know that last a good amount of the time in this financial year where the inflationary pressure has always been putting good amount of challenging environment for the real estate as such. However, since we have gone ahead with a fast track execution, those ones we believe that we have witnessed those challenges and we could witness the price increase, and hence almost the PAT level kind of a thing, that margin has remained almost about 9%. So going forward, if the inflationary pressure still remains unsustainable kind of a thing, as Dhavalbhai mentioned on the opening note, we do have to further go under the price increase as a path.
Okay, that was really helpful, sir. And also just wanted to check, can you provide the numbers for the total unsold inventory from all the projects at this stage?
Can you please repeat? Sold and unsold?
The total unsold inventory that is there from all the projects.
So in terms of all the projects unsold inventory, we have a value of about 655 crore, as I am mentioning regarding the existing project portfolio. So that is the total valuation about the unsold inventory and the unsold inventory, and as well the balance revenue to come into the income statement.
Okay. And sir, just last question. I wanted to check your status on the demerger. It's been a while that's still pending. So is there any update on it, or are we expecting any movement on that soon?
Yeah, there is quite a significant update that, we during this FY22, we availed the shareholders' approval, which was the last stage at which, the approval required. And now the final petition is at a NCLT level. And last couple of hearings, we could not had the hearing or the petition came on board kind of a thing. So we are also awaiting to have the petition hearing and take the demerger process completion by way of NCLT, which is the final stage of the approval.
All right, sir. That was really helpful. Thank you and all the best.
Thank you.
Reminder to the participants, anyone who wishes to ask a question will press star and one at this time. We take the next question from the line of Aditya Mehta from Dynamic Investments. Please go ahead.
Yeah, hi. Good afternoon, sir, and thank you so much for taking my question. So I had a few questions. So first one I have on the Manhattan project. It would be really helpful if you could share some details on Ajmera Manhattan project. And would also like to know what are your expectations for the revenue recognition and the sales velocity for this project.
So, as far as Ajmera Manhattan is concerned, this is a residential 2-3-4 BHK in Badala, which we are starting. Overall top line of this we see in the range of around 1,400 to 1,500 crores. And the work of the same has already, as I said, in terms of permissions, approvals, environment, all of that has been secured, and the work has already started. So we are hopeful to finish the construction of this in 3.5 to 4 years. And while we just launched this project officially about 2-3 weeks ago, and there has been a good traction in terms of sales. And we hope to see great numbers coming in the coming quarters, which will be which we are very confident it will be really nice. I am just waiting for the final checks to be. Some have been already deposited, some are on the way, but the numbers are looking very encouraging.
Just to add on to your question, the second part about the revenue visibility or revenue recognition visibility onto that. So as you know that, this particular project was also a part of the project where we paid this approval cost by December 31st. So significant part of the cost, which is on the account of approval, which has already been paid upfront kind of a thing. And as we know that, POC follows the cost incurred versus the total budget. So having spent good amount of front-loaded cost on approvals, and as well further execution cost which we have going to incur, because I have entire financial closure available on this particular project, which is also at a competitive pricing of about sub 10% in terms of the cost of debt. So there is, given the initial response on the sales side is also very, very buoyant. So given all the factors, we will go completely, fast track on the execution and bring this particular project on the revenue on a very ASAP basis kind of thing.
Okay, sir, I get you. Okay. So, and my next question is, if it would be really helpful if you could share some details on the Ghatkopar project. As it is mentioned, it will be launched in December 22, if I'm not wrong.
Ghatkopar project.
So which is, that particular project which is under acquisition, and we have almost completed the entire documentation stage of that particular project, because there is a blended, while acquisition, because of the MADA, NOC and such kind of procedures involved into that particular thing. So which is, we got completion of that particular thing as we speak now. So we should be coming back and announcing the launch of that project very soon. And as well, this project has the credential of the private equity, the first private equity deal closing also simultaneously while we are acquiring.
Okay, sir. Understood. And sir, my last question would be if I can squeeze in one. With the current rising input costs, what is your take on the same? As in, have you planned or already hiked the prices due to this?
Yes, we have already hiked the prices because the current input cost is evidently, all can see that it is increasing, and it is having a bigger impact in our margins. And obviously the input costs have been drastically increasing in terms of our steel, cement, etc., everything. So we are increasing the prices as and how where we can see, but definitely it is the range of 8 to 10%, but depending on project to project and everything. But overall, if you see, there has been an incremental, and we hope that these prices don't increase further, because cost of construction is becoming a little expensive, and we hope that it will be coming to a sustenance level in the coming quarters.
Okay, sir. Understood. Thank you so much, sir, and all the best. I'll get back in with you. Thank you.
Thank you. We take the next question from the line of Mr. Jeevan Patwa from Sahasrar Capital. Please go ahead.
Hello, Dhaval bhai. Actually, only one question I have. So, can you just give a breakup of the cost in the Manhattan project? So, how much you expect the construction cost would be in the Manhattan? The per square foot cost I'm asking.
So, per square foot cost, only purely construction, if I have to say, because we have over here the the residential area to livable area versus the non-livable area is almost 1:1.5. So in terms of base, podiums and all of that. So if I look at the total total area of construction on the total area, which is around 13 lakh square feet, it will be about 4,000 to 4,500. But if I have to put this on my sellable area, it will come to around
on the sellable basis, it is around 6,000 plus kind of a thing.
Okay. And if you have to load the approval cost and everything on that, then?
There are different cost components, like, as I mentioned, the sub 10% finance cost kind of a thing. So important components is that being the approval cost, which we have paid upfront under the 50% concession scheme kind of a thing. And plus there would be selling and marketing because of the, overall I'm
not asking about selling and marketing cost. I am asking about if you have to add the approval cost, then how much would be the approval cost per saleable square feet?
About 2,500.
2,500. Okay. Perfect. That's good enough. Thanks a lot, Dhaval bhai.
Thank you.
Thank you. We take the next question from the line of Mr. Jayant Menon. Please go ahead.
Hi, thank you for the opportunity. Since we all have been speaking about Manhattan, I just wanted to understand what kind of sale visibility do you envisage in the coming year from the project? Because this seems like a larger project in the portfolio. So, and this is officially launched, so just wanted to understand on that.
So as we speak, go ahead.
So we are looking at as usually the real estate cycle, what we have experienced and seen is that there is a launch phase, and then there is a sustenance phase, and then there is again a relaunch or other jump which will come to take the project ahead. While we are in the launch phase, we are expecting this to have at least 20 to 25% of our sales to happen in the next, the launch phase over the next 1 quarter or, something like that. While then it will move on to the sustenance phase, but we are seeing the 20-25% jump coming, and then probably it will be a sustenance phase for the next 2 years, which will continue with the cash flows coming in and the sales happening at the same time. So that's where we are targeting to see.
I'll just take one more question. Since you spoke about 25% and the estimated top line was about 1,500, so assuming that there is a sales visibility of, say, 350 to 400 crores from this project, the presentation talks about 650 crores of visibility from your existing projects which are in the mid stage, and then it also talks about a few launches. So just on an overall basis, what kind of number management targeting on sales in the over the next 12 month period? Are we looking at a 4-digit number?
So very interesting question. As you rightly map the maths kind of a thing about, Manhattan is going to give the good jump of on the launch and as well on the sustainable basis on the balance part of the financial year. Another project which is the nucleus commercial, which we have brought into outright sale model, which is also 100 plus crore going to be the sale revenue, and this project has reached to a OC stage project. And few of the projects where we have marginal inventory kind of a thing, which is going to be sold out, during, immediate basis kind of a thing in this FY23. And as well, Greenfinity and Sequoia, as I explained, the project has almost gone into the, superstructure completion on the Greenfinity, and Sequoia also almost 90% superstructure completion. So we are targeting to complete these two projects also in, during the FY23 kind of a thing. So all these summation put together, like, existing inventory, nucleus, commercial, Manhattan launch plus sustainable sales during the FY23, and, this Greenfinity and Sequoia balance inventory because of the execution way ahead of the schedule kind of a thing. So we are very confident that we should be surpassing this number which you have put forward as a aspiration.
Yeah, this is interesting. Thank you and all the best.
Thank you.
Thank you. We take the next question from the line of Mr. Varun, an individual investor. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Mr. Varun, please go ahead.
Hi, thank you for the opportunity. I had just one question. This is regarding your new launches that are coming up over the next couple of years, that is where you have projected a revenue of close to around 4,000 crores. There was an investor earlier who had asked about the construction and the approval related costs on Manhattan, and I think you had roughly guided to around 7,000 to 7,500 on the total area. So just since most of your new projects are in Bombay, wanted to get a sense that would this be the rough cost range for the entire portfolio or the new launches, like around 7,000, 7,500, including your approval cost on the total area?
No, it will be different. So basically, if I have to see, because every project is in a different area, it is, basically our approval costs are linked to the readiness rate of the particular area or a particular town. But if I have to look at different projects and different areas, this 2,500 is basically sellable, because if I convert it into carpet, it will come to around about 4,000 rupees or roughly something like that. But to answer your question, it will be in the range, if I have to say, in the range of, if I have to look carpet to carpet basis, it will be between 3,000 to 5,000. But obviously it depends. If I am in different cities where the rates are higher, it will be a little higher.
So this is 3,000 to 5,000 on the saleable area or on the total area that you're talking about?
No, on the carpet area.
Okay, on the carpet. So that will be I would say roughly it will be close to 2 times your saleable area, right? And plus minus.
No, it will be lower. No, carpet areas are usually lower because this is construction area, as I said, is higher. It's 1 is to 1.5 times. So the construction area is higher versus the carpet area, which I said. So usually, if I have to just give an example, in Manhattan, your carpet area versus your construction area is almost about, so if one is my carpet area, my construction area is 1.5 plus. That's 1 plus 1.5, so it's 2.5 bracket. So construction area is higher than the carpet area.
Okay. So what you have denoted in your presentation as the saleable area, so what is that? That is the carpet area or the...
Yeah, that's the carpet area. Certain areas, it's a different analogy used different places. So Bangalore uses a saleable area, Bombay uses carpet area. It's different for different, but it's almost on the same lines of what we are saying is basis the carpet area and that saleable area is carpet area and that.
Yeah. So this 3 to 5,000 is including your construction cost and your approval and development cost, right?
It's purely approval cost. It is purely approval
Okay.
cost.
Okay. And your construction cost would be standard, right? That I'm assuming would be close to around like 5,000 or something, basically.
Little over 5,000.
Yeah.
Yeah.
Yeah. Okay. Thank you.
Thank you. We take the next question from the line of Shashank from Value Educator. Please go ahead.
Thank you for the opportunity. So I have two questions. So first, if you can give some update about our Kanjurmarg land, like any future guidance or like from when we can monetize this land or anything on a legal front. So that would be my first question.
Ajmera land is still under legal processes. While we are at it, what we need to do, but there are certain government and the judiciary processes which are not in our hands. But we expect this to get cleared and happening over this financial year, and hoping to launch soon. But in my best estimates, it should be this year or probably next year, somewhere around there.
Okay. Thank you. And my second question is, any update from the international projects? Are we expecting anything in this financial year, 2023? Any revenues?
Yes, we do expect from the UK market, as we have been guiding that, that market is where the, sale traction happens when the almost ready to move in stage of the inventory in the project. So which is the stage at which we have almost reached to, and we are seeing the sales traction. We should be looking at the repatriation from the UK market somewhere, between 1 or max 2 quarters within this financial year. And then after on a, sequentially on a monthly or such kind of a basis.
So total any number can you guide us, like for the whole year on an international front, how much revenue are we expecting? Any ballpark number if you can?
So from UK market, as we have been saying that, that's the matter and the sales traction and the cash flow from the sales kind of a thing. But conservatively speaking, we should be getting at least 80 crore plus kind of a thing from the UK market. And as well on the Bahrain, as we have exited that project last year, and we do have the inventory entitlement, which is about 10,268 square meter, which is, going to be constructed, which is because it's an under construction property as of now. So the sale of inventory and as well the construction will be the timelines will be about 2.5 to 3 years.
Okay. Thank you very much and all the best.
Thank you.
Thank you. We take the next question from the line of Gaurav Sarda from VV Advisors. Please go ahead, sir.
Yeah, thank you for giving the opportunity. Sir, my first question is on the Bangalore nucleus project. Since you mentioned that you have moved this project from a cash flow generating revenue model to an outright sale model, can you shed some light on that?
So basically, this is about 1,27,000 or 1,30,000 square feet area project, and which is, we have sales potential of about 100 plus crores, which is going to be expected out of this particular sales of nucleus commercial project.
Okay. And my second question is related to your Pune project market yard. So you have mentioned that the estimated revenue is around 340 crores. So is this the total revenue of the project or the share of Ajmera?
This is the total revenue of the project kind of a thing, and we do have the share of 23% into it. So that is how the ARIL stake is going to be calculated based on the revenue recognition.
Okay, and one last question. What would be your visibility on the existing portfolio? I mean, in terms of timelines, what are you expecting for the same?
So as we spoke, all the advanced stage project has brought to OC. So those ones, the marginal inventory left out is going to be the sold out on a immediate basis. The mid-stage project, which is where Greenfinity and Sikova, where the execution has reached very ahead of its schedule. So that particular those projects also we do expect to complete in fast track basis and complete with delivery in FY23 basis. And few of the projects like Nucleus, C-Wing, which is the second part of the Bangalore project, and as well this Bangalore project, which is another Florenza, and as well the Lugano project. So those ones will be the life cycle of about 2.5-3 years.
Okay. And do we see any delay in any of these projects?
Sorry? Do we see any delay in any of these projects? No, in fact, on the A and B wing, we have also, brought this particular project to a OC stage along with the commercial development. And as well on the Lugano side, as I explained, the entire arrangement which has undergone change with the landlord, and as well we are going to enhance the entire project base from A and B wing alone to A, B, C and D. So that's how the entire execution of this A, B, C and D will be taken care of.
Okay, fair enough. Thank you so much, sir.
Yes, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question will press star and 1 at this time. Participants who wish to ask a question will press star and 1. We take the next question from the line of Mayuri Sinha from LKP Securities. Please go ahead.
Thank you for taking my question. We are seeing that commercial projects in the portfolio are increasing. So what is the expected mix between residential and commercial, say, in 2 or 3 years down the line?
So you are right. We are slowly increasing our commercial portfolio from what we are. But there is no such fixed thing. But from what we intend to do is that at least rise it to minimum 10 to 15 or at least 20%, and going forward to about 1/3. So that's where we intend to take it forward in the coming future once we have some more lines coming in. But commercial projects are primarily depending upon the location of the project, of the plot, and its demand supply analysis. But overall, we see this increasing to about 20% to 30%.
Okay, understood. So if I may ask one more question, what is your take on ESG, and do you have any ESG or sustainability reports?
Sorry, ma'am, can you repeat your question again?
So what is your take on ESG, and have you published any ESG or sustainability reports?
So as I mentioned in the investor presentation also, on all the 3 fronts like ESG, environment, social, and as well governance side kind of a thing. On the environment, because at the site level we do take care of the environment friendly materials kind of a thing, STP and the solar power kind of a thing, water waste management kind of a thing. And at a governance, of course, we do take care of entire pieces regarding the governance, SEBI compliances, dissemination of information, UPSI, unpublished price sensitive information, adherence and such kind of a thing. And as well, coming to the social side, we through our CSR spending, we have spent almost about 31 lakhs in Q4 of FY22 and 94 lakhs during the entire FY22, encompassing the water management program for the 2 villages, and as well taking care of the malnourished children program, women empowerment, education, medical assistance, and free health checkup, and something of those programs kind of a thing. So on all the 3 fronts, we do take care of the compliances, and as well going above the requirements of the society.
Okay, understood. Thank you. That's really helpful. And one last question, if I may ask, are we looking at any strategic partnerships or development opportunities in any of our projects?
Well, primarily we are looking at any opportunities coming our way which adds brand value and as a value to the overall project and the top line. Definitely we are open for strategic partnerships. We are in talks with few, as Nitin Bhai said, for our Ghatkopar project, which we are doing. Having said that, in the coming future, if there is an opportunity which is coming which will add value to the top line and the overall sellability for the project, it's more than open to take it forward.
All right, understood. Thank you. That's it from my side. All the best.
Thank you. With the next question from the line of Vinay Khattar from Edelweiss Financial Services Limited. Please go ahead.
So my question was regarding the sales velocity. Now we are into first month of the next quarter. If you look at last 4-5 months, especially in Vadala area and maybe even in other projects, how do you see the queries and closure of deals? Is there some kind of a slowdown that we are witnessing in last 2 months vis-a-vis what it was, let's say, 4-5 months ago?
To answer the question, as I said, we are seeing, if I have to compare any launches, I would simply aside the launches, but overall probably this month, because of slowdown in 2-3 factors because of the stock market, also with vacations around, there has been a bit slowdown, but not as I would expect it to be there, usually in the cases. But as compared to probably January, February, yes, I would say May would be a little slow.
Understood.
But if I have to look earlier months, it wasn't as March. March was good. January, February, March was good. April was also good, sustainable. Probably we are seeing a dip now in May, but there are factors for it in which we have taken into consideration. So while probably we should bounce back, hopefully by June again.
So, Dhaval, given the overall sentiment both in city market and in residential market, especially once you look at 8-10% hike, which is across the board phenomena, all companies are forced to take that because of input costs. So, combined impact of sentiment and price hike, to your mind, can that create some degree of pressure over coming couple of quarters? And this is more from an industry perspective is what I would request you to answer.
It would have an impact and a pressure for sure, because there will be, if you see overall everywhere we are seeing price hike happening, not only us but every developer and every other across India, everyone is forced to increase the price, while none of the developers would want to, but it is the external factors which are forcing it to be done. While I say so, at the same time, if I look overall, there has been overall look at cost hike and also cost of salary, cost of living, everything is going higher. So while I would say this may mitigate to a bit, probably there will be a dip down for a pressure maybe for a certain period, but overall I still see a positive sentiment for home buying. So it may, somebody psychologically may feel that I may have looked something at an X and today it's plus 10% or 15%. So it may, take its time for it to digest, but overall I still see a positive impact coming.
Understood. Second question was, just in terms of basic bookkeeping, what is the cash flow that is due from already sold inventory, and same number from ongoing projects with unsold inventory?
So if I have to give you the overall existing cash flow position from the existing portfolio kind of a thing, so we do have about 260 crore balance receivables out of the existing sale positions kind of a thing, and as well about 650 crore available inventory to sell on a conservative price point. We do have the balance cost to complete about 460 crore and the outstanding debt of about 107 crore. So that all four factors put together should give us a good chunk of the cash flow of about 340 crore plus out of the existing portfolio on the life cycle completion and as well on the sales collection.
Understood. Thank you. That's all.
Thank you.
Thank you. We take the next question from the line of Shashank from Value Educator. Please go ahead.
Yeah, thank you for the follow-up question. So as we have mentioned in our investor presentation that we have about 18.2 million square feet of land. So out of that, how much land do we have in Mumbai specifically? If you can share that number, please.
So Bombay contributes to about 80-85% of that. And there are other areas. So, but to answer your question, it will be around 80-85% of that should be in Bombay.
Okay. Thank you. And any further details about the Codename 1 in Mumbai and 2? So what are the locations, if you can reveal or give some details about it, and when we are planning to launch any quarter or any month, if you can share some details.
Which one?
The Codename is mainly.
Yeah, Mumbai Codename 1 and Mumbai Codename 2.
Yeah. So Central Mumbai. Yeah,
go ahead, Mr. Go ahead.
Yeah. So Codename, Central Mumbai 1 and 2 is the two different locations in Mumbai, and we are working towards, bringing this project to particular stage of the launch kind of a thing, and we should be divulging the information as we announce the launch of those projects through corporate governance standards. So definitely we should be coming back and divulging the relevant information at appropriate time.
Okay. Thank you. Thank you for.
Thank you. As there are no further questions, I now hand the conference over to Mr. Nitin for closing comments.
I'm really thankful to all of the participants for putting us a good set of insightful questions, and as well your questions will definitely guide us to improvise further, and as we have promised, we will come back with better numbers and better performance as we move forward. Thank you. Until then, stay safe, stay happy. Thank you.
Thank you, everyone.
Thank you. On behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.